Good day and welcome to the CNBC Africa Conversation special. I'm Zinathi, Gquma, your host. In a time as economies battle returning to normality and with alarming warning signs of climate change, the race towards investing in renewable infrastructure is increasing. Africa still requires billions of dollars of infrastructure to fill the necessary gap to reach the Sustainable Development Goals by 2030. Mohan Vivekanandan, a group executive of client coverage at Development Bank of Southern Africa, joins me now to explore the current infrastructure developments. Thank you so much for your time, Mohan. And before we get into what DBSA has been doing this year, I just want to go to your financial year last year. The last time you were here, it was July in 2020. You mentioned that your targets were about 13 billion rand, and 4 months into the financial year, you had already spent about 7 billion rand of that. You mentioned that you might be exceeding that target. And I just want to zoom in on how the previous financial year went before we go into this financial year.
Sure, Zinathi. Thank you very much for the opportunity. We're still in the process of releasing our financials. They haven't come out yet. They need to be tabled at Parliament as well. So I can't go into a lot of the details on the financials yet, because we are also, we have some assets, some bonds that are listed on the stock exchange. But I think to say at a high level, we were quite pleased with the financial year that ended in March 2021. We were able to achieve our developmental outcomes, including meeting our lending targets, as you said, around 13.5 billion. So we're quite proud of that, under what I'm sure everybody would say has been very challenging time period for the country and for the continent as a whole. So we were able to meet the majority of our developmental targets. And the details will be released. So.
Great. Well, thank you very much for that insight, Mohan. And I just want to now zoom into this financial year. What kind of targets has the bank set? And I'm just interested in also the kind of divisions within the infrastructure sector that you will be injecting a lot of that money into.
Sure. What we've decided to do is, we know that as a development institution, we need to continue to play our critical role in the economy. And continuing to support infrastructure development, infrastructure financing, primarily here in South Africa, but also in the rest of the continent aligned to the country's goals. So we're keeping our targets the same as what we had looked at pre-COVID. So we're looking at around 13.5 billion rands worth of lending again, and that's roughly split. About 2/3 of that work will be here in South Africa, and then 1/3 of the lending targeting the countries outside of South Africa in sub-Saharan Africa. And then, typically, if you think about our work in South Africa, typically about half of that work in South Africa is in supporting our municipal clients, both with lending and also with technical assistance. And then the remaining work is in other infrastructure sectors. Certainly the energy sector is a big one, but also, we're seeing opportunities in social infrastructure, and we're really stepping up, working especially with Black sponsors in a number of different social infrastructure sectors as well.
Right. So you are talking about opportunities in social infrastructure, and I think this also speaks to the kind of behavior changes that we have seen when it comes to COVID-19. A lot of sectors have really surpassed other sectors in terms of economic contribution because of COVID-19. And I'm just interested in how COVID-19 has perhaps changed how you lend, how you get to the process of lending, because we have seen COVID-19 really changing the landscape of a lot of sectors in the economy. Has this changed maybe your terms of lending?
Yeah, obviously, certain elements of infrastructure lending don't change. But having said that, there have been certain areas. I think one of them we're seeing is that traditionally a significant amount of the DBSA's lending, over 80%, went to supporting other public entities. So, state-owned entities, municipalities, and even other sovereigns outside of South Africa. Now, those public entities are definitely feeling the squeeze, in terms of fiscal constraints, high levels of debt to GDP. And so what we are more actively doing now than in the past is really coming up with ways to crowd in private investors into infrastructure, both on the equity side as project sponsors, and then also on the debt side, co-lending with the DBSA, where maybe we take a slightly longer tenor or we take a more subordinated position, which allows private investors, commercial banks and institutional investors to also fund infrastructure. So that role of the private sector is something that we're definitely seeing growing more. And that's something we're actively trying to drive. The other one, tied to that is we're trying to work on providing more project finance structures where you have standalone structures, and the cash flow being generated from those projects can satisfy the operating costs and the capital costs repayment of those projects, as opposed to balance sheet lending. So those are some of the elements that we are pushing ahead on.
And Mohan, you're talking about crowding in private investors as well. And I'm just wondering about their participation and willingness to be involved in these projects.
Look, there's significant interest from the private sector, in participating in infrastructure projects. One, if you think about it, it's a critical asset. And the level of non-performing loans typically for infrastructure is much, much lower than other sectors. And often if you can structure it correctly, it's actually a relatively moderately risky asset, which a lot of private investors, especially pension funds, are very keen to have, to be invested in. It's just a question for them of having the right assets to be able to deploy their capital into. So, one of the work we do is working through our project preparation division, and now the infrastructure fund that's been established to create more bankable opportunities for private investors to come into. So I think that is a critical element. And then second, on the financing side, it's a question for us of how do we, play maybe in a more subordinated financing role, meaning taking more risk that gives more comfort for private investors to come in. And so, that's another specific area, but there's significant interest from them in this asset class.
And what about the role of green bonds in this financing?
Look, I think green bonds do have a role. For instance, we as the DBSA just had a private placement of a green bond for about 200 million euros with the French Development Agency earlier this year. Now, obviously, there are some constraints then around how those funds can be used. They want to see the use of proceeds. But that does help us a lot because it gives us access to another source of capital, usually medium to long tenor, and often maybe even at slightly more concessional rates than what you can find if you were going to just raise capital in the open markets. So for us, we've seen it as a source of value. And I think you're seeing a lot more entities as well, that are looking at green bonds. Obviously, they do need to satisfy the needs of the lenders, in terms of reporting and the use of proceeds. So it's not as simple, and it does maybe put some limitations, but it can be quite helpful actually. And I think it's something that a lot of lenders should be looking at, both green bonds and more openly, more social bonds as well. So this is where bonds that generally help fund the SDGs, the Sustainable Development Goals.
You talk about these green bonds needing to satisfy the lenders, and I'm just interested, is this maybe a policy action that is needed? What is needed to get through those constraints?
Well, the first thing is you need to have projects that meet the criteria of those green bonds, right? So for instance, it depends on how narrowly those are constrained. Some of them may only be focused, let's say, on renewable energy. Others may support, maybe mass transit or water conservation, water reuse. So a broader definition. So it's really about having the projects in your pipeline that are going to utilize the source of funding. and you need to have that in place, and you need to demonstrate that so that there's confidence in the entity that's subscribing to that green bond that their funds are going to be used for their purposes. I suppose they're going to be concerned about your governance and your track record, and then finally also your operating, your operations evaluation, meaning your ability to report back on how those funds were used and the impact that they had.
I mean, last month, Mohan, we had quite a few challenges in South Africa, I think for the past few months. Actually, last month we had the unrest that ravaged KwaZulu-Natal and parts of Gauteng. And then we also had level 4 lockdown where we had more restrictions. And, talking about the unrest, infrastructure was damaged. And I'm just interested if any of your projects that you do support were affected by the unrest.
Yeah, I mean, these were terrible events for the country and for the people affected. I think from the DBSA's perspective, we haven't seen specific significant impact yet from those unrest. In fact, we've just gone through a process where our teams have been looking at the impact, both and speaking to our clients to understand how have they also been impacted. And I think the good news is there hasn't been a significant impact on a lot of our projects. Where there has been is some of the municipalities that are clients of ours are the ones that have had the significant impact. So if you think of, eThekwini, for instance, it's probably one of our top 5 clients. City of Joburg, one of our top 2 clients. A number of other municipalities in KwaZulu-Natal as well, who have seen these impacts. Msunduzi as an example. So our clients have seen that impact. We're engaging with them, trying to understand, what does that mean for themselves, for their abilities possibly to repay the loans that the DBSA's provided, and also how we can be supportive. And we're working on a program actually with the Industrial Development Corporation as we speak to try and stretch the boundaries of our lending. So that, because what they're telling us is that municipal infrastructure actually hasn't been impacted that significantly, which is the focus of the DBSA, but there are others, township businesses, other businesses have been impacted who are ratepayers. So we do need to see how can we help, at least in the short term, to support those businesses while still staying within the mandate of what the DBSA does.
And just still sticking to those challenges that the country has had to deal with, we really do have another level of indebtedness in the country. Lots of businesses are indebted. And I'm just interested in, if any of your clients have basically if any of your clients have defaulted, and what provisions you've set aside to ensure that they are cushioned from these risks.
Yeah, when the COVID crisis began, over a year ago, we were quite worried. And so we did, set up provisions, which had an impact on our financial results in the previous financial year. We then also engaged with all of our clients trying to understand how have they been impacted. What we've been pleasantly surprised with is actually, those worst case scenarios that we built in haven't come to play. And I guess, as I mentioned before, we'll be releasing our financials in the next month or so, and there'll be more detail unpacked at that time. But we have been pleasantly surprised that it hasn't been as bad as we thought it would be. Obviously, there have been some of our clients. We funded a couple of airports, for instance. And those have obviously seen less volumes. There have been some other sectors as well that have been impacted. Some projects have been delayed because contractors haven't been able to come to site. Hence, we've had to extend the period of our loans for the drawdowns to take place, to allow the clients a bit more time, to get those projects done. But I think from our side, it's been more about a timing impact as such, as opposed to a significant financial impact.
Mohan, talk to me about some of the key projects that you have funded outside of South Africa, and which divisions are leading the pack.
Yeah, I mean, we have 2 teams working outside of South Africa, one that focuses on the SADC region, and then one that focuses on the countries outside of SADC. And I think they've both been busy. I would say, we recently concluded 2 large transactions in Angola. One is a large solar PV project, working with an American developer and with some European lenders, backed by the government of Angola for basically it's for solar PV to bring more energy onto the grid. Another project there has been a ports project where we've just approved funding for upgrade of a port near the border with Namibia, and we think that's going to help them diversify their economy, and export more of their goods as well beyond the oil and gas sector that they're highly exposed to. In Mozambique, as an example, we're working closely with the electric utility to improve the quality of their electricity grid. We're working in Tanzania with the country's key project, which is the standard gauge rail project, connecting the port of Dar es Salaam all the way into the countries in the interior, in the Great Lakes regions, countries like Burundi and Rwanda as well. So those are some of the key projects in SADC. And then, if we think about outside of SADC, we've been doing a lot of work in West Africa as well. Ghana has been a busy country for us. As an example, we funded an energy IPP there and an LNG receiving terminal and some agricultural infrastructure for the cocoa industry. But we've also been quite busy in Côte d'Ivoire as well, helping the roads network, improve the roads connectivity in Côte d'Ivoire. So those are examples of specific projects we've been involved in outside of South Africa.
Mohan, we have jumped into a very important issue here of energy and energy security in Africa. And from your view, as we move to this greener economy, what does a just energy transition look like in your view?
Yeah, I mean, it's an absolutely critical area for the country, for the continent, and the DBSA is very focused on this sector. Probably upwards of half of our lending goes into the energy sector, whether it be funding utilities like Eskom and other utilities in the continent, or renewable energy projects where we've funded I think the total value of funding to the IPPs is north of 15 billion rands, for instance. So it's a big area for us. Certainly one element is the energy transition itself. There's new technologies, the prices are dropping all the time in renewables. There's advances in battery storage. We're hearing about advances in green hydrogen. So specifically the areas we've been involved in to date have been in the renewable energy sector. We've funded pretty much all the rounds of the IPPs. We've provided funding support for a number of the risk mitigation IPPs, which also have elements of dispatchable power. We're looking forward to hearing about the close of those financial projects in the next month or two. And then, we've just provided support as well for the bidders for the 5th round of the renewable energy IPP program. So, that's a lot of work. That's specifically on the energy generation side. We know there's a lot of work also needed in transmission to be able to bring power from some of the newer areas like the Northern Cape to feed into the rest of the country, and even to interconnect the region so that the Southern African power pool is stronger. So that's the transmission side. And then, going beyond that is to say, we know over time, the plan is for coal-fired power plants, to be decommissioned, to a specific schedule that Eskom has. It's going to have an impact on those workers and the workers, in the nearby coal mines as well. So how do we, what's the role that we can play in helping to strengthen those economies, for instance, in Mpumalanga, so that, we're doing our part beyond just the infrastructure side, but also in those economies as well, to provide more economic opportunities in those areas.
Yeah, and the South African government last week actually gazetted amendments for the energy regulations in terms of the threshold for self-generation from 1 megawatt to 100 megawatts. And DBSA has called for proposals for energy projects as part of the embedded generation investment program. What is the process here and the criteria that you will be selecting for these projects?
No, you're right. It's actually really exciting news. I think it's one of the big positives on the economic side in South Africa, this significant increase up to 100 megawatts. The estimates are there could be well in the region of 75 billion rands of new capital expenditure going into these projects over the next couple of years. So, that's very exciting. And most of that, we believe, and I think the experts believe, will be in the renewable sector coming in as well, just given the cost advantages. So what we've done is we worked with the Green Climate Fund out of South Korea to put together this facility. The total size is about $200 million, but it's going to be a RAND facility. And really what it's there to do is to provide a long tenor subordinated debt facility that supports project sponsors and commercial funders on the debt side to get those projects to bankability. And there's an element of that also looking to support Black project sponsors as well, to help with their equity contribution into those projects so they can also participate in these projects. And we're looking at going up to tenors, I think in the region of 18 years maybe, which obviously depends on the length of the power purchase agreement of that offtake. But the point is to make the debt longer and therefore more affordable over time versus and therefore to make this asset and these assets more bankable as well. And we look forward to seeing the various sponsors coming through, applying for these, maybe lead arranger banks that are pulling together the funding packages, seeing how this facility can support their own funding and funding from other investors as well to make these projects bankable. So it's not just supposed to be the DBSA funding all of it. As I mentioned, the total requirement is 75 billion plus. So $200 million, 3 billion rands is still a small amount, but we're hoping that it can help support some of these projects.
Yeah, while we're on climate change, of course, we do know that water security is a very important part of that. Our very own President Cyril Ramaphosa actually said during the cabinet reshuffle that one thing that we do need to concentrate on is water security. And DBSA has provided funding for phase 2 of the Lesotho Highlands water projects. What does that entail and what are the targets here?
Yeah, we're really happy that this transaction has been able to close, and we're expecting the funds to be drawn down in the early part of next year. So to give you an idea, the TCTA, the Trans-Caledon Transit Authority, is the government entity that's raising this funding. They raised about 15 billion rands of loans in this one facility, so it's a significant amount. And of that, the DBSA underwrote 5.5 billion and of really long tenor of 20-year tenor loans. So it's a long time to be repaid, whereas the commercial banks and the other institutional investors from South Africa that participated in the remaining 9.5 billion, did shorter tenors. So, it was us really working closely with our commercial banking partners in making the deal happen. And yeah, we're really, really excited about our role in it. And as we said, the funds will be utilized for that second phase, bringing in, much needed water into the Gauteng region in South Africa, which has seen, significant population growth and hence, increase in water usage.
Yeah, and of course we have to talk about the largest free trade area, that is the African Continental Free Trade Area Agreement. Really, the continent stands to benefit immensely from that. So what role will the DBSA be playing in advancing the AfCFTA?
Yeah, I mean, it's something a long time coming, and the ultimate benefit of it is going to take many decades. If you think about something like the European Union and what it started from as a coal and steel authority in Europe to what it is today, what we see is, there's different areas that are needed to be worked on. There's things like, tariff and non-tariff barriers. There's other such elements. The one area that we've identified as our role is around trade enabling infrastructure. So, if you don't have the infrastructure that's connecting countries, then you're not going to have the trade taking place within African countries. I was reading an article, I think over the weekend, from the president of Nigeria, speaking about a rail line they're setting up from the coast of Nigeria around Lagos, all the way going up to the north through to Niger and the Sahel region. And what the point he was making is, while the countries aren't trading a lot, it's partly because the trade enabling infrastructure doesn't exist. And similarly, if you listen to South African exporters, they'll say there are big gaps. For instance, the efficiencies of our border posts are not where they need to be. The quality of the rail connectivity the roads connectivity from the port of Durban through the Gauteng region, through countries like Botswana, Zimbabwe, going through Zambia to the DRC, and then connecting to the Great Lakes regions is just not, what it should be if you think about the amount of time that it takes and the cost involved. So those are specific areas. That north-south corridor in particular is a specific area that we're focusing on, including the border posts. But there are other areas as well. For instance, I mentioned the connectivity from the port of Dar es Salaam, using that railway, the standard gauge railway, into the Great Lakes region through that, what's called the Central Corridor in East Africa. That's another area where we're working on as well. So that, that is the focus, is that trade enabling infrastructure. We think that's our role to play.
Yeah, so you talk about this trade enabling infrastructure and the lack of it, and I'm just interested if anybody has come to you to say, listen, we want to do this, we want to establish this trade enabling infrastructure, and we want your help. Have you gotten any of that, or do you think it's still too early?
There have been, specific approaches. Some of it, for instance, has been from private sector entities that are looking to lease and provide locomotives and rolling stock infrastructure to improve connectivity. There has been work in some of the border posts as well, not just the ones, the DBSA, as an example, is working with Home Affairs on improving 6 of the border posts between South Africa and our neighboring countries. But there are other border posts as well, for instance, between Zambia and the DRC, where there's been work being done. There's roads networks where there's investments going in. So it's some of it is rolling stock related. Some of it is the upgrading of the roads itself, and the border posts also. So there have been some of that. Probably not as much as we'd like. I think there are some challenges around, for instance, with the rail network. There's multiple rail operators in that Southern African rail network. So it's not just one entity, which really makes it a challenge, if you were to, let's say, export copper from the southern DRC all the way through to South Africa, through to Durban. There are challenges involved.
Well, really, as much as there are challenges, there really are a lot of opportunities to explore with the AfCFTA. And thank you for giving us insight as to the role that the DBSA will be playing in that, and also Africa's energy transition to a greener economy. Thank you very much. That's where we'll have to leave it for the CNBC Africa conversation for today. Thanks to my guest, Mohan Vivekanandan, Group Executive of Client Coverage at the Development Bank of Southern Africa. From me, Zinathi, Gquma, it's goodbye.
I don't think